There is a new Western focus on Kazakhstan, Uzbekistan, Kyrgyzstan, Armenia and Mongolia, stimulated by the worldwide demand for critical raw materials such as uranium, manganese, chromium, lead, zinc, copper, aluminium and many more. The worldwide demand for these resources, coupled with the need to diversify supply chains away from Russia, China and other politically unfriendly jurisdictions, has prompted the USA and European countries to strengthen ties with Central Asian nations. However, substantial investments and financing are required to upgrade or replace Soviet-era infrastructure to increase the export and transport of raw materials out of landlocked countries. The challenge lies in promoting the flow of funds, particularly cheap financing, to fuel the region's economic growth. The outlook is optimistic, with the potential to attract diverse sources of funding to the region. As the West deepens its engagement, countries of Central Asia and the Caucasus are poised to emerge as key players in the global economic landscape. Please welcome our speakers and panelists who have joined us to discuss the latest developments in promoting the flow of international financing to support mining and critical raw materials development in the region.
Hello everyone. My name is Corinne Noel of Counsel at Simmons and Simmons in the Energy, Natural Resources and Infrastructure Group. My focus is on project finance and M&A of project finance assets in emerging markets. And I will be moderating this panel with my colleague Alexander.
Hi, I'm Alexander Keepin. I'm a partner here at Simmons and Simmons, and I specialise in public markets work, particularly for energy and natural resources clients.
So we've just heard from the introduction, obviously this new focus, Western focus on Central Asia, Eurasia globally with those raw materials. Obviously all of that will require financing, funding, not only to develop the project, but also to transport the raw materials and whatever comes out of the ground. We've just heard right now landlocked nations, so this is really making transportation a key point as well, and we'll hope to cover that in our session.
So, to start with, public markets have sort of traditionally been a key source of finance for mining companies, and those mining companies from the Central Asian region are no different to any others in that respect. We obviously hear a lot about the public markets and the state of public markets in the news, so we thought a useful way of kicking off this session would be to hear from the sort of two principal exchanges which mining companies turn to, being the Toronto Stock Exchange and the London Stock Exchange, to hear how things are and the outlook for companies from the region. So following the presentations from Ayuna Nechaeva, the head of Europe and CIS at Primary Markets and London Stock Exchange, and Graham Dallas, who's head of business development for EMEA at the Toronto Stock Exchange, will then be joined by a panel of debt, equity and investment management players who are interested in the region, have investments in the region, to hear what they have to say about the outlook and what will hopefully be a lively discussion. But to kick things off, I'd like to invite Graham Dallas to come to the stage and give us a presentation around the Toronto Stock Exchange.
Thank you very much. Good afternoon, everybody. Well done for surviving lunch. I'm just going to take a few minutes. This really is an introduction to the Toronto Stock Exchange. I'm sort of guessing and assuming that a lot of people here will be more familiar with London. So just at a high level to give some idea of what the TSX, the Toronto Stock Exchange, is and what it does specifically in the mining sector. And at the end of it, there's two invitations. So that's something to look forward to. First thing to point out is that Toronto is a major financing centre. It's not as big as New York, and these days it's not as big as China. But one interesting thing is you can see our market capitalisation is just under $4 trillion. 10, 12 years ago, there was a proposal to merge the London and Toronto stock exchanges. At that time, Toronto was about something between 30 and 50% of the size of London. Today, it's roughly the same. On any given day, these numbers change. London goes up, Toronto goes down, but broadly, Toronto and London in stock exchange terms are pretty much the same. in size. In mining terms specifically, Toronto is the biggest mining market for financings and for listings these days. So these numbers are over a 5-year period where the Toronto markets are responsible for raising 36% of all the equity raised by publicly listed mining companies anywhere in the world. The closest competitor over that 5-year period is the ASX, the Australian Stock Exchange. We have a lot of mining companies listed, 1,100 and something, I think. And we kind of cover the whole range from very, very small to very, very large. The peer groups that we can offer to mining companies are very suited to, I guess, the segment and the point they are in their life cycle. So this is a snapshot of the largest independent mining companies that are listed with us on Toronto Stock Exchange. The top two are gold. Nutrien is a fertilizer company, then there's another gold company. Teck is a diversified company, and Cameco, a uranium mining company. Some of them are listed in New York, at least one of them is listed in Australia, but all of them are listed in Toronto. Toronto is the sort of necessary and sometimes even sufficient platform for a mining company to be listed. And I could produce something similar for different segments. These are companies with their market caps in the tens of billions, but moving down the value chain all the way down to very small junior companies. We have a lot of mining companies, let's say over 1,100. 1,157 in fact. This kind of compares Toronto to the other major mining markets that people consider: London, Australia, Hong Kong and New York. And by most measures, really Toronto takes the biggest market share of any of those exchanges. So you can see, as I said, we've got 1,100 companies listed. ASX Australia is the next largest with 800. In market cap, we're not the largest. Market cap, we're behind London, for example. What we have is a far larger number of companies at all sorts of different levels of development and different scales. These slides will be available, I think, through MINEX, but also you can just call me if you want. So really, Toronto is the leader over the 5-year, a 1-year, a 3-year period for mining capital raising and liquidity for precious metals and for base metals. We can offer a really unrivaled peer group, companies at all scales operating in every continent, in many, many jurisdictions. Importantly, companies that are listed in Toronto have very good access to investors in the United States. I've worked for a number of stock exchanges, and people are always trying to establish cross-border trading. Cross-border trading is fine if you're a very large hedge fund or a very large asset manager. If you're a smaller investor or even a medium-sized investor, cross-border trading is hard. The only place where I've seen it work really well is between the United States and Canada, where you can literally open a position on the New York Stock Exchange and close it seconds later on the Toronto Stock Exchange at virtually no extra cost. The extra cost is fragments, so less than a basis point. And various other things that Canada, I think, leads the world in, particularly best practice both in, we set up good standards in ESG, and I think the mining disclosure, geological disclosure regime that's led by Canada with the 43-101 report is widely recognised pretty much everywhere. It's a very large institutional market. As I said, we have access not only to the large institutions within Canada, but the companies listed in Toronto have access to all the money that flows through New York. On an average day, we reckon about 40% of the flow through the TSX comes from outside, and that really means from the United States. So very, very good connectivity into the US markets. We have a huge number of mining analysts covering small and large companies. Half the analysts that are working in Toronto work on the mining sector. It's in the DNA, it's in the lifeblood of the Toronto markets. Toronto kind of in some ways sort of invented the junior mining sector as an industry, and that expertise and interest reaches all the way up through, as I said, to very large companies with values in the tens of billions. There are a few things that set it apart. We have lower free float requirements that in some circumstances can make a difference to companies that are trying to choose a place to list. I mentioned the 43101 industry-leading standard for valuation and geological data. There's a very good and pragmatic and practical and comparatively low-risk legal class actions, for example, are quite rare and comparatively well contained in Canada. But I don't think actually it's the rules that make Toronto a good place for listing mining companies. It's the fact that there's so much human capital there. There are so many people, organisations, firms, companies, funds, media outlets that cover mining, that are interested in mining, that understand mining, that promote mining. It's the place where mining companies go to raise money. It's enormously important as a sector to the TSX, and I think we're important as an exchange to the mining sector. And one last thing, it's really important, given that mining is so central to the TSX as a business, we as an organisation have invested in the market, continuously in developing, in upgrading, in supporting the structures, the personnel, the people that we can control within the TSX. We've invested heavily in that, and I think it's paid off. The ratio of GDP, of market capitalisation to GDP over a 20-year period has gone up in Canada by 160%, similar to the United States. I don't think it's just because we invest in it, but I think that's been enormously helpful. The invitations. One, do get in touch, and if you'd like more information, we'd be happy to help. Two, some of you may know there's a Mines and Money conference starting tomorrow in London. We're having a party tomorrow night. It's 5:30. If you'd like an invitation, come and see me, or just come along. You'll be able to find someone to tell you where it is. Loads of people will be there. And the last, and I think perhaps the most important one is, do please think about coming to the PDAC mining conference in Toronto in March. It's the first week of March every year. It's huge. There'll be 25,000 people from all over the world in the mining industry. Mining companies, mining investors, companies with things to sell, companies looking for things to buy. It's the biggest mining finance and industry conference anywhere, and it'd be great to see more people from the Central Asian region coming. I know people are beginning to come. We'd like to see lots more, and do get in touch if you'd like any information about that. That's it. Thank you very much.
Thank you, Graham. Yes, please do take a seat here. And I, for one, will look forward to seeing you tomorrow night, because I'm coming along to those drinks. I think what we're going to do in terms of sort of format of the session is that we'll take questions at the very end. So if there's questions for Graham, if you could hold on to them for now, please. And in the meantime, Ayuna, can you please come and give us the version of how things are in the London market?
All right, brilliant. Thank you very much, Alexander, and thank you, Graham, for your presentation. It's always useful to present second after your competition. So I'll be able to also address some of the points that you mentioned, hopefully, but in a friendly way. Graham and I have known each other for a long time. My name is Ayuna Nechaeva. I head up the European and CIS business development at the London Stock Exchange. I've been with the exchange for nearly 15 years now. Today, London Stock Exchange Group is a diversified global financial market infrastructure. Our market cap is around 50 billion. We operate in 190 countries in the world. And we have the three main pillars of the business that we represent is around capital formation, and London Stock Exchange is very much part of that. Data analytics and capital optimization and risk management. This is sort of a snapshot of the group today. Very importantly, we also operate now in private markets. So increasingly, a lot of companies, including mining businesses, seek private capital before they go public. So it's really important for us to support that. The London Stock Exchange Group invested in a platform called Flow, which helps earlier stage private companies raise capital. We're developing an intermediate trading venue, which is a market for secondary fundraising for larger private companies. And then, of course, the public markets, where we have AIM, which is a growth market, and the main market. Just in general, before moving on to specifically the mining sector, just to give you a snapshot where we are globally. This year, 17 billion, actually to date, 17.7 billion raised overall on the market, on the London Stock Exchange markets, which is a massive number given all of the headwinds and challenges that the global markets have faced today. A majority of this capital is through follow-on offerings, so it's companies that are already listed raising this capital. We are number 1 in Europe, so definitely ahead of Frankfurt, Euronext, Amsterdam, and so on. And globally, we're in the top 5. This is not a mining company, but just again, a very quick snapshot. Eutelsat, which is a French satellite group, it's the European answer to Elon Musk. We welcomed Eutelsat Group just a few weeks ago as a secondary listing in Paris and London. The reason I'm raising this is because number one question that everyone has been asking me for the past 5 years is what about Brexit and how Brexit affected the London markets. Well, the Brexit is over. I think the markets have readjusted, and we're actually now building bridges very actively, and we have now a lot of dual-listed EU/UK companies. So, in terms of money, Graham touched on the money available in Toronto. Very quickly in the UK, the dedicated asset under management, again, massive amounts of money, very large liquid market here, $446 billion US dollars. It's just dedicated for UK stocks, which is 2.6 times more than any other European capital. So, over to metals and mining. So, mining is one of the top 3 largest sectors on the London Stock Exchange. They are the main finance, banking, financial services sector, plus oil and gas and consumer. So, in the metals and mining sector, 175 companies, total value 472 billion US dollars. And 3 out of 10 largest companies in the world are listed and traded here. And again, in a very similar fashion, because London is such an international big market, we have a lot of companies that are dual listed or triple listed here. So really important to have that exposure for mining companies, both junior and established ones. In terms of comparison, interestingly, because London is an international financial center, it's not just about UK money. Around 40% of all money held by investors in UK-listed stocks is actually from the US. So non-UK investors hold around 60% of the value of LSE-listed mining companies. And these are the top numbers you can see on the screen, you know, the usual suspects: BlackRock, Vanguard, Norges Bank, etc., State Street. Really importantly for us is, and we spoke about this at Mining Europe conference in Poland, which took place a couple months ago. The key thing is actually mining. Not all mining is equal, right? So you've got, gold or precious metals companies, but you've also got critical minerals companies. So the lithium, vanadium, and rare earth companies, which are really key to the transition to sustainable economy, and they play a key role, in the EV industry, for example. These companies are gaining more and more traction, more and more attention. And the interesting thing in London is that UK investors are underweight these companies. So there's a massive opportunity for companies, that extract lithium or copper to really pay attention to that, because the level of demand is phenomenal. Quite a few new listings over the past few years. We had Metals One, Unicorn Mineral Resources, Kendrick Resources Fasting, Clean Tech Lithium, quite a few smaller and medium-sized businesses listed in our market, which is really important. It's I will talk about this in a minute. It's not just about whether you're a mining company. It's about what do you do and how do you do this? So how do you do business in mining? But secondly, where you come from. And I'm really happy to say that London Stock Exchange is very receptive and has a long-term partnership with Central Asia. So we have quite a few Central Asian businesses that are listed in our market, including from the mining sector, and I'll talk about this in a minute. But before that, just to tap on, I think one of the biggest recent listings that we've had dual listings, which is Wheaton Precious Metals, which is a US company, current market cap around 18 billion. We're very North American, sorry, Canadians. Yes, you can see it. We're very, very proud to see it, and it's one of those examples, as Graham mentioned, of dual listed companies that actually tap basically the best of both worlds. Counsel is a UK-based company focused on obviously tungsten, and its AIM size is not that big, so it has come in. But I think the one that I want to spend some time, the company that I want to spend some time on is Clean Tech Lithium, because again, it operates in this very interesting subsector of the mining industry. So they listed on AIM last year, raised just not a huge amount of money, just over 7 million. A market capitalization was 30 million, and since then it has doubled. So it just gives you an example of the level of interest that investors have in stories like that. And I don't know if I have Central Asian slides here, but I'll just talk to them. I think that's really important. So before I talk about sustainability, I just wanted to spend a few minutes to talk about Central Asia. So we have 26 Central Asian companies listed and traded in our markets, and a lot of them are in the mining sector. I think the biggest success story from Central Asia was Kazakh company Rowe, which is an uranium leader in the uranium industry in the world. So they dual listed in London and Astana in 2018, and since then the market value of the business has tripled. Moreover, this company actually came to the market 3 or 4 times after the IPO, raising additional capital. So throughout the pandemic, the 2022, which was a really challenging year due to the Russia-Ukraine war, I think the company was able to tap the market in London. So international investors know and understand Central Asia here. And I think I'll pause here because I think we want to leave some time for the discussion, I'll try and touch on this during the conversation that we'll have afterwards. Sustainability is a huge aspect. All the companies on the main market of the London Stock Exchange are asked to disclose information in line with TCFD, the Task Force for Climate-Related Financial Disclosure. That's really important for us because we need and want companies to do well, and it's not just about returns, it's also about the impact on the environment and broader economy. For mining companies, there are things like green bonds, sustainability-focused bonds, and transition bonds that are really important. And we even have a couple mining companies that have a green economy mark because they operate in this subset of really interesting sustainable mining subsector. So I think I'll pause here, and if you have any questions, I'm here, and then we'll also be able to have a discussion during the panel session. Thank you.
Thanks, Ayuna, and sort of interesting to see quite a few Simmons clients up on the list without any sort of prompting. From a sort of natural justice perspective, I feel like I should give Graham a right to reply, but we're not here to decide which is the best stock exchange. I think the key point from what we've seen from both the TSX and the London Stock Exchange is that there are options for mining companies to list in the capital markets. You shouldn't just believe what you see in the headlines in the newspapers, but actually if you look at what is going on, companies are still listing, there is still capital available for mining companies. So On that note, I would like to introduce, I'd like the panel to sort of step forward, and we will have the second half of our session, which is a discussion around the various types of finance and what investors are looking for.
Thank you. So if we could ask actually our panelists, the new 4 panelists, to actually introduce themselves, if you don't mind, your respective institution as well, and also your interest in Central Asia. So we already know about the first 2, so it's just the new 4, please. Jeff?
Yes.
Jeff, do you want to start?
Sorry, I was just testing my mic. Good afternoon, everyone. My name is Jeff Jeter. I work for the European Bank for Reconstruction and Development here in London, or EBRD. EBRD was started in 1991 to fill the void in Central Europe and the FSU, and to help promote a transition to free market economies. So our original countries of operation were confined to the former Soviet Union and Central Europe. Since then, we've expanded first into Mongolia and Turkey. After that, we've expanded into Northern Africa. And over the next 5 years, we have plans to expand into 6 countries in sub-Saharan Africa. We are active in 35 countries currently, including most of Central Asia. And our shareholders are 72 countries from around the globe, the EU and the EIB. Since 1991, we have invested 180 billion euros in 6,800 projects. So fairly new organization, fairly big, and we're what's called a multilateral development institution. Personally, I'm a geologist. I've had a 40-year career, with 30 of those years spent here in Europe. I worked for 20 years for an environmental and earth science consulting company, doing work first in the southwestern U.S., mainly in the mining sector, and coming to Europe. I arrived in Europe in the 1990s as things were changing in the FSU, and actually my first job in the Soviet Union was in August of 1991. Following on from that, I opened up an office in Moscow in about 93 and 94 in Almaty, Kazakhstan. So I've worked around this region a little bit. But again, I'm a geologist. I work in the environmental sector. I'm not a banker. We do have a banker representing us here today if you have banking questions, but I will speak to my knowledge of the banking process, but primarily in terms of environmental and social conditions for finance.
Thank you, Jeff. Now, over to you, Carla.
Okay, I'm testing this. It's working. Hi, everyone. Good afternoon, all of you. I'm Carla Toledo. I'm officer at the International Finance Corporation. I've been working with IFC for the last 16 years around infrastructure and mining, particularly on sustainability. So I think we will be speaking around ESG a lot. IFC is member of the World Bank Group. We have offices in more than 100 cities in the world, and we invest in various sectors: financial institutions, infrastructure, ports, airports, manufacturing, agribusiness, and mining. As member of the World Bank Group, we are focused in promoting development of the private sector in emerging economies to foster economic growth and to reduce poverty. My team, or where I belong in IFC, is part of, it's called Sustainable Infrastructure Advisory, and our role is to help companies manage environmental risks, to build inclusive, diverse workforce and supply chains for mining and for infrastructure projects, to enable transparent communications with stakeholders, and also to promote investment in local communities. I think I would summarize this what we're trying to achieve is to create value, shared value for our partners, for the governments, and for the communities where our projects operate.
Thank you, Carla. So over to you, Antony.
Thank you. Antony Rowe, an investment manager with Resource Capital Funds, a mining sector focused private equity group. We've been operating for 25 years in the mining sector. Our main private equity strategy is just finishing its investments of Fund 7, which is about a $700 million fund, and we'll be launching Fund 8 in the new year, targeting $1 billion for that. We also manage a smaller, a more flexible equity strategy alongside that main private equity fund, which invests in exploration and earlier stage opportunities. A growth capital fund strategy which focuses on mining equipment, technology and services companies to develop new areas of mining technology development, advancing the industry in terms of efficiency of operation, health and safety, sustainability. And we'll also be launching a private credit strategy in the new year as well, which is my background is 20 years as a mining finance professional, first as a lawyer, then in banking for Investec Bank here in London. Our funds have a global mandate, so we're looking at opportunities across the globe, but I think most have made a number of investments in the Central Asian countries, Mongolia, Armenia, and most recently in Kazakhstan, a $90 million investment in a gold development project in Kazakhstan, RG Gold.
Thank you, Adrian. And then, Antony, and now Adrian, please.
Thank you. Hello, everyone. My name is Adrian Petreanu. I work for Ashmore as an investment manager. Ashmore is a dedicated investment manager focused on emerging markets. We manage about $50 billion in emerging markets, primarily in liquid EM debt and EM equities. I'm personally focusing on the corporate debt side, so invest in debt issued by companies with a focus on the EMEA region. My background is commodity. I spent 15 years working for Cargill as a commodity trader, after which I spent about 11 years working at Ashmore as a commodity investor in companies from the commodity sector.
Thank you. All right, so now we're going to kick off the Q&A session. So the first question that we had to put to the panel, since we have to, as we said, finance this development and this additional supply of raw materials for the world, really, we wanted to talk in particular first with the IFIs to understand from them exactly how they're going to support that development and that funding. In particular, it would be interesting to understand, the mandate that these IFIs have to support development, and to some extent they're almost like the first entrant, if you will, in the market, opening then the door to other modes of funding. So if we could start maybe with the BRD, Jeff. And you were going to talk to us about this, the mandate, but also more specifically, I think, the revised mining strategy that the EBRD has.
Well, sure. Thank you very much. Regarding the mining strategy, EBRD has various strategies and policies which are updated periodically. Our mining strategy is currently being updated, and we hope it will be released in the very near future. The draft versions have been disclosed already for public consultation, so it's out there in the public domain. Our mining strategy helps identify the areas that are right for EBRD to pursue in the mining sector. And I'd have to say that the key points there would be that our strategy carves out a place for us in supporting exploration and production of the metals required for the green transition. So we're all well aware of strategic metals, minerals, the AEA report, etc. And we refer typically to the metals as outlined in the AEA report. So that's one of the areas that our mining strategy has identified would be a niche for EBRD. And part of that is because one of the items, while our mandate initially was to promote free market economy. As we expanded, as I mentioned earlier, to various countries of operation, that mandate has changed and gotten larger, and it includes green. So we have a requirement to have so much of our investments in what we would call green investments. So that helps support going after the minerals and metals that support the transition to green economy.
So Jeff,
Is this
I'm not sure. Turn these off.
Turn this off.
Turn these ones off.
Okay.
So I think the translators were struggling to hear with the lapel mic, so we've got resorted to the old school.
Hopefully you've heard me here in the room. I won't start over, but that space of the transition metals is a very interesting space for us in the mining sector in the region of Central Asia. I guess another area is, along with the green mandate, decarbonization. So we've all seen the pathways of decarbonization, and they're extremely aggressive. And a lot of the mines that we work on have a very big challenge on the decarbonization pathway. They're often isolated, serviced either by diesel generators or the electric grid. And to get all of these mines onto the decarbonization pathway, it is a very large task due to the amounts of energy required for these. So that's regarding our mining strategy. I guess the only other thing I would like to mention now, and I think we'll come back on some of these a bit later, is that I mentioned our original mandate was to help promote free market economy. That has kind of changed to what we call transition now. So we have 6 indicators or pillars of transition that we look for on all of our projects in varying amounts. But those pillars are to be competitive, to be inclusive, to be well governed, to be green, as I mentioned already, to be resilient, and to be integrated. And integration refers to energy, IT, and transportation. So I think I'll stop for now.
Just maybe one more word about the political risk aspect of it. You were going to touch on that.
Right. Well, we do not provide political risk insurance. Some of the banks we work with, US Exim, et cetera, do. That's not a space for us. But as I mentioned, we are owned by 75 countries from around the world. And a lot of people look at our the composition of our shareholders as giving them a fair bit of assurance that they will not run afoul on geopolitics. So often people look to EBRD and our counterparts, IFC, as good mitigation measures for political risk, even though we don't offer political risk insurance.
That's right, thank you very much. And then first. Over to you, Carla, then. And how can you maybe distinguish the positioning of the IFC versus the EBRD to some extent?
Thank you. And I think we have many points in common in what you were saying just a few minutes ago. In Europe and in Central Asia, IFC has an investment portfolio in infrastructure projects, and it's been focused a lot on energy, particularly on renewables, wind, solar, hydro, and in transport. And I mentioned this because those are critical sectors for enabling conditions for mining to operate, which are very important. Over the last decade, we have invested almost $6 billion in mining across the world, and we've mobilized additional funds. Last fiscal year, we closed with a bit more than $800 million in our mining portfolio, and we're active in copper, lithium, and bauxite. And all of them, similarly to EBRD, are critical minerals for the energy transition and for a low carbon future. And that's a very important aspect on what we do around mining. We work with investors and partners and governments. The whole idea is to unlock private mining investments into environmentally and socially sustainable ways. And this is important because our performance standards, environmental and social performance standards, constitute an internationally recognized framework for ENS risk management. Each investment that we do is assessed for ENS risks with our own specialists, and we set an action plan to walk through an operation. I would like to say that our investment services combines loans, debts. When we take equity, we never take more than 20% of an investment. And also, we are offering lately, with increased demand, sustainability-linked financing, which includes supports and advisory services to promote ESG objectives and to set up targets and clear incentives to maximize development impact. So that's something that I would also like to say. I think I will stop there, but maybe...
Yeah, maybe for now, thank you very much. So that covers, first of all then, so the bank loans, starting with the IFCs. We don't have any representative commercial lenders, but obviously commercial lenders go along with the IFC, and very often, this is kind of going to be a big syndicate with IFIs and commercial banks. But moving on now to corporate debt, we actually, when you start in a country, based on the discussion, preparatory calls we had with the panel, it became apparent actually that what happens first is that it would be actually preferable, if possible, to have a sovereign bond to begin with, just to set up a benchmark in terms of pricing, but also of everything, documentation and disclosure. And therefore, we thought it would be a good idea if Ayuna could actually talk briefly about the bond, the corporate bond, that your sovereign bond you've done recently for Uzbekistan. Is it?
Yes.
Thank
you, Corinne. Indeed, when a new company, a new country or frontier market comes to the international markets, of course, they very often work with EBRD and the IEC. One of the ways to establish a track record and, more importantly, establish a benchmark for not only for the government but also for the private companies that will wish to tap international markets in the future is to list a sovereign bond. So Uzbekistan, the government of Uzbekistan listed its first international sovereign bond on the London Stock Exchange in 2020. And that actually really led to a number of corporate bonds being listed in the aftermath, which was fantastic, primarily by Uzbek banks. A lot has happened since then, as you all know, and we were really delighted to have Uzbek Finance Ministry return to the market this year, despite the challenging market conditions. They listed, not only did they list another sovereign bond, $660 million US dollars at 8.1.3 yield, cent yield, but they also actually listed the very first green bond, which is, I think, really great. So they've established a taxonomy, they've established the projects in which they will invest these green proceeds from this green bond listing. And there is a further $348 million US dollars at a much higher level, 16.5%, but still it was really important. And that was done in the local currency. So a lot of the financing that for various sovereign governments and for investment in countries also done in local currencies, which I think is really helpful to the countries, especially when the FX rates are unstable. So that's and I think that paves the way then for further engagement with the international investor community.
Thank you, Ayuna. Yeah, exactly. It paves the way for corporates then to step into the breach there. And Adrian, if you could comment on that, this is exactly the needs anyway.
Thank you. Indeed, I would like to agree with my panelist colleague here. Ayuna is very right of the importance of establishment of a sovereign benchmark. We, as investors in corporate debt, tend to look at risk in terms of spread over the sovereign, how much additional yield you are getting versus the sovereign risk. And absence of sovereign risk, we tend to be conservative people, not as optimistic as our equity colleagues, and as such we assume the worst and we would put expectation for yield quite high. So one of the things that governments can really help the development of the local capital market is to establish a benchmark, and that doesn't mean only one bond. Ideally, a benchmark that has several points on the curve, several bonds that establish a curve at least up to 7, if not ideally 10 years. Issuance beyond 10 years is relatively rare in the corporate space unless you're very, very large and well-known company. So several points on the curve is really helpful for corporates to tap into this market. And another thing which is extremely helpful to encourage the development of corporate bonds from kind of especially smaller countries is encouraging the development of a local pension industry, local insurance industry. I cannot stress how important is the accumulation of local capital. I've been investing in emerging markets for over 25 years, and I can tell you that countries that have been successful in emerging markets are the countries that have accumulated local capital in their pension plans, in their insurance companies, because that's the capital that it's going to support the issuance of equity, the issuance of debt in the local markets. And lastly, I would like to add, because somebody mentioned political insurance. Again, from the government side, the best thing that you can do to help the markets and help the corporates to raise capital is to run a stable system and to make sure that investors don't ask for political insurance. So that's, again, something that's quite helpful.
We'll see if we can add a little contrarian view to that in the next bit of the panel discussion, because I think sort of it'd be good to turn to the equity side as well. But Antony, RCF both provide debt and equity, and I think it'd be useful if perhaps you could share a few thoughts around your approach for investing in the sort of Eurasian region, what you see as the biggest risks and how you manage them, and see if political risks featured in that.
Yeah. Thank you. I think we've over the years have invested in different approaches into the region, and some more successful than others. I think the most recent investment with RG Gold, I think, is a good model. I think one that we're applying elsewhere to our investment strategy. And I think probably two key features to that investment, which has been part of its success. One is working with a good local partner, where one of the big risks that we face going into all markets, and particularly into emerging markets, is one of social license and cultural context. Making sure we understand that going in, and that's where working with a good partner helps mitigate that risk. We can bring international funding, we can bring international expertise, but it's unlikely that we will have that local context and understanding needed to make a successful investment. So I think that's one aspect that I think is important to the way that we, from an equity and also from a credit perspective, will look at investing. I think the other aspect to that is related, is also then looking to build your local relationships and build on getting that support from institutions, whether that's development financing, multilateral financing. I think that is also another area where the local content I think is critical, and so that investment benefited from a $300 million loan from the Development Bank of Kazakhstan. And that's an area where it helps mitigate that other key risk that that was just mentioned. Stability, transparency, those sorts of aspects, which are what our investors are relying on us to manage and mitigate. We can't do it alone as an international private equity investor, but we need to work with the local groups, local institutions as well.
Okay, thank you.
And I think on PRI, I think we can say that we have taken it and we have benefited from it. And I think it's something that we will. It's not required on every investment. It's down to the specifics of each one.
And I mean, one of the things that's coming from the panel generally is it's a matrix. You know, there's no one solution to any of this, and it may be local partners, political risk insurance, or who your co-investors are that give you the sort of the comfort around those sorts of risks and best to manage them. We are running quite tight on time, and I think a number of the panelists have already mentioned sort of ESG, so I think it would be nice to spend a few minutes on that side of it.
Yeah, that's right. So we've been talking about ESG. We've touched briefly on governance, perhaps. We haven't spoken at all about environmental, social. In fact, social is really important, in particular for mining, because, well, all three are important. But despite all the kinds of the stories about mining, it's been vilified probably unduly, because in fact it's always been very close to communities from the very beginning, because there's no successful mining project without involvement with the communities. So if we could maybe speak first with IFC, Carla, if you could talk a little bit about your requirements, your institution's requirements, and what you do, and how ESG actually enables the success of the project.
Yes, no, thank you. I think it's a critical aspect. I think what we have learned through years is that I briefly touched on the performance standards and the ENS risk management of the projects, and this is something that is a basic condition, how to comply with those regulations. But what we have learned is that it's not enough. Usually mining companies need to go and do additional interventions to make sure that the benefits that they can create can really be tangible for the local communities. And that requires voluntary actions that we can support the companies that we invest in. And that can range, for example, community investments that really address community needs, that are sustainable and in agreement and in partnership with the governments and the local governments. It can also include how to make sure that local businesses can be part of the supply chain of the mines, and that those businesses can really create jobs for the local communities, and that those jobs can also benefit women around those communities. So there are different things that needs to be done, because the expectations that mining creates in the host communities are huge, and you need to somehow address those expectations. Again, mines will never do it alone, because it's impossible to address all those expectations, and this is where partnerships with the host governments, with the other institutions around, are critical. And the other thing I would like to mention, just to take two ideas, is I briefly touched on the sustainability-linked finance, is how to make sure that companies have a clear sustainability strategy, and how to really, put the money where their strategy is. And this is, for example, last year in June, we signed a loan with Anglo American for their operations in South Africa. It was a $100 million loan for their social investments in the surrounding communities in South Africa. And it was for creating jobs outside of the operations and for the education system in South Africa. And this is something that we feel proud about, because it was part of the company's strategy. But again, it was us also facilitating that those strategies could be met with specific targets for the next years. Maybe you can touch on other examples that relate to decarbonization, but that was something you were mentioning, but I'll take it there.
Yes, we've pressed for time perhaps, so to move on to your BBRD, and if you could talk to us a little bit about this concept of additionality you were talking about
Right, so firstly, let me just state regarding the standards. So Carla has mentioned the performance standards of the IFC. They're very similar to the standards of EBRD, which are the performance requirements. And more recently, the commercial banks have taken on the equator principles, which means they're signing up for IFC standards. So in terms of the standards, we're in a lot better place than we were, say, 15 years ago when people had different standards. They're all fairly well aligned now. and we see large project finance, the financing packages developed for all the multiple different financiers they have. So that's good news. We've made some progress there. It really helps when you start your project if you know about that and you do things to kind of manage that. I wanted to touch on risks a little bit. I would echo Carla's points. One of the main risks we see on these sites is social. It's regarding keeping local communities happy. And we try on every project that we work on to address this proactively from day one. And we try to encourage our clients and coach our clients on this. And we still see problems rear their heads in places where I would never think they would. I was on a project in Central Europe where I thought the client couldn't do a better job. And for the first 2 years, everything went well. And in year 3, they were in a terrible situation because of local community. I can't stress how important that is and how difficult it is to get right. And even when I think you've done everything right, you can still have problems. So watch that space. Regarding our additionality, it kind of overlaps with other areas of risk as well. So again, we're viewed as government money, so there are high bars in terms of what it takes to access that money. So we have to be additional. We can't compete with commercial banks, for example. Our management tells us if it's a situation where we're looking at financing something and the commercial banks would do it without us, there's no space for us. So we have to be additional. We have to, and one of the main ways that we can bring additionality is leveraging those commercial banks to come into a financing package that they wouldn't if we weren't there. And oftentimes we see that with IFC and EBRD. But there are other areas for additionality as well. Like I mentioned, our mandate for green transition. So if you have a faster path to a low carbon pathway, inclusion is another area. Working on a line in Mongolia, we were looking for opportunities with our company that we had invested in on what we could do on inclusion. And it turns out that the women working on the mine site wanted to drive the big haul trucks. Yet, there was Mongolian law against it. The women were prohibited from driving these trucks. So working with the client, the Mongolian law was changed to allow women to drive, and women drivers came into this fleet. And surprise, surprise, the company saved a lot of money on petrol, on clutches, and on brakes. So it was a really great situation. Again, the areas of risks I wanted to mention, the areas of risks that we see, it's funny where the risk comes from. Working on a large copper mine in Mongolia, of course, the avenue for export is 90 kilometers down the road into China, and this is for the concentrate. Come COVID times, border crossing, all of a sudden it was a very large mine making a lot of concentrate, no place to take it. So security of transportation is a big thing in your export. Another one, if we're talking about Central Asia, both the projects I'm working on in Kazakhstan, also Mongolia, arid regions, water security is a very, very big risk. And can't overstate the importance of this. And especially in light of the social items we talked about, that need to be so cautious on water that you're not taking water that would be used by the local population, which could cause extreme hardship on them and very bad publicity for everybody involved.
Absolutely. Thank you very much for those anecdotes. Really helpful. Adrian, do you mind commenting a little bit on that as well, ESG and how it fits in your note?
No, absolutely, thank you. I mean, I would say that any company that is planning or thinking about accessing the international bond market, raising some money via the EBRD or IFC, it's the best training that you can get to establish the highest possible quality standards in terms of disclosure, And that comes back to the fact that sometimes the focus is on getting the cheapest financing. The cheapest financing might not be the most attractive deal for the long term. So I think what would create value for the equity, what will attract more international investors, which would set the company for high standards, and again, working with these institutions that would very helpful in providing standards for disclosures, it's quite important. And also, if you're in the mining industry, there's this perception that E is the most important, and sometimes G and especially S gets kind of a little bit left behind. Is really the S that can come and create problems at any point in the life of the project. So definitely do not kind of think that one is more important than the other. They all need to be addressed and constantly managed.
Well, thank you very much. I think that sort of really fills our allocated slot, and don't want to eat too much into the refreshment break ahead of the remaining sessions for today. I would like to thank all the panellists very much for their introduction. Obviously, if you want to speak to Graham or Ayuna to learn more about which is the best stock exchange, please do. And the availability of listing there. Obviously, also Carla and Jeff in terms of the support that their institutions can bring, as long with Adrian and Antony regarding what they look for and the investments they would like to make. So I hope you found that useful, and thank you all very much.